Bitcoin's pump in the last 24 hours has just gotten bigger for Bitcoin. I want to show you why that is the case on the charts and how cryptos are continuing to collapse left, right, and center. Stay safe in the markets while Bitcoin is pumping. Now, it's hit our key target level. However, it's closed almost to the dollar in that zone. So this is the critical time now for BTC to test and show us whether the bulls are still in control or if this was a fake out pump, just like the news has suggested for Bitcoin with the Bitcoin ETF approval fake news, which was then said publicly by BlackRock. Guys, we've got a lot to get through today. We've got the US dollar to cover. The S&P 500's had another great day, along with the VIX dropping yet again. The NASDAQ also having a really good day there. Plus, we've got to get through ETH, looking at where this cycle could potentially end for cryptos to the downside before we start to load up on risk on assets, ETHUSD as well. So, you know the deal, like and subscribe. We're your home of macro cycle analysis, covering cryptos, Bitcoin, the stock markets, commodities, and real estate. That's the cycle that we are following here. The macro markets are up. That is confirmed. So if you're macro bearish, this may offend. What I suggest is at least hitting the subscribe button, even if you are offended, because it costs you nothing and you can hear an opposite side to what the masses are saying, looking for recessions in 2022, 2023, and now they've pushed them out to 2024. Of course, what we're doing is covering all of the markets because this is of utmost importance for Bitcoin and crypto, because you need to see the rest of the markets going up in order for Bitcoin and crypto to also go up if you're only exposed to the long side of the market. Guys, let's start with the psychology of a market because I think that goes hand in hand with where we currently sit. The bears think we're in this space, the complacency bound. So I've seen that across many of the pro traders in the space across Twitter, YouTube, etc., saying that the stock markets are bouncing, just like what's happening in the NASDAQ. And they think that that looks almost identical to this particular chart here. But what we've seen is the decline and the move to the upside now for these macro markets. And they're sitting at higher levels. So that's the S&P 500, the NASDAQ, the stock markets. They are putting in these higher lows. Now, we were talking about this back at the lows. If you were here on the channel, let us know because there are still quite a few people who are joining new here. And if you are new, 1 out of 4 of you still have to hit that subscribe button. You know the deal here on YouTube to help out with the algo. Now, the purpose here is to identify the lows and sell at the highs. It sounds simple enough, but you can remember when I was talking about the lows here coming in through 2022, that second half, or going back to June, I was met with a lot of hate and saying that how stupid I was and all that sort of stuff, right? But that is the symptom of a low. That is basically what happens to a T at the lows. And now we saw that again in August and September for the stock markets. We saw that same sort of rhetoric coming out saying, you're foolish, this is going to collapse further. What the markets are doing is so far, as they always do, at this stage anyway, continuing to put in higher lows upon higher lows. This low is slightly higher than this low. So far, this is the low. Maybe we come back and test this level a little further. But essentially, we've got some higher lows forming here on the short term. We've got higher lows forming on the longer term as well for these markets, which is a good thing for Bitcoin and crypto if we're going to see them take off in 2024, 2025. You don't want to see the stock markets collapse and break significant support levels, because that would destroy Bitcoin and crypto's chance of hitting any new all-time highs in 2024, 2025. That would probably take them out for several years, not just maybe another 6, 12, 18 months. So everything is on track here for these markets to recover, I would say, later in Q4 of 2023, if not in the first half of 2024. And this is for the stock markets, S&P and the NASDAQ, just continue taking out these highs as we're still seeing the patterns play out relatively well here. Great on track. You've got higher lows, higher highs forming in amongst the broader picture here of the lower highs and lower lows. What you need to see on the shorter term basis is more higher lows and higher highs form, which then allows the market to build up momentum, consolidate, and then break out and continue to test those higher prices after having such a beautiful 50% run to the upside for the NASDAQ. Yes, you have to have a nice healthy pullback, and the same thing rinses and repeats across longer time frames. So we're seeing these markets sit within the psychology of a market cycle here, sit somewhere, I believe, in this disbelief stage. And once we break out of disbelief, what happens next is we head on to the hope. A recovery is possible. For some, we might already be in hope in our own minds that we're going to go into newer highs. But what we want to see is broadly across the market is that we head into hope and that most people are thinking, well, this recovery is possible. That, of course, leads into your optimism. Next is your belief and thrill, and that's when the masses come in. That's when everyone is thinking the market is going to go up, which is basically the end game here. That's the mania stage, and you would have hopefully experienced it through altcoins in 2021, where basically you're buying at the top when everyone thinks the price is going to continue to go up. The flip side to that is prices can keep going up for quite some time after that point. As the old saying goes, markets can remain irrational longer than you can remain solvent. Err on the side of caution with the mania that I expect coming up, especially for the real estate markets in the coming years. So, still sitting through this disbelief, it can take some time. Looks like that's what's happening. And yes, of course, it takes some time. In terms of the news, before we get to BTC and how this pump is affecting cryptocurrencies, again, breaking to fresh lows and what happens from there, a couple of the news headlines as we get into the dollar, because the dollar is also affecting the markets as well. Now, the banks basically don't know anything, or they know everything, but try and fool each other. I think the banks are trying to fool each other, as they do. That's where the most money is. It's not necessarily just retail, but retail get mixed up and screwed in the process anyway. So the banks are saying, JP Morgan and Citi expect euro to fall to parity with the US dollar, which means US dollar to continue up. Now, maybe somewhere around this stage, we'll start to see the US dollar break down even further, as it's already put on several days to the downside, a little pump here, and it's trying to grind its way higher again. Lower highs have formed now. We've got a few here and a couple of lower lows. We do want to see this another lower high and then a breakdown somewhere in this vicinity, around that 107, and anywhere to that upside, I would say, is about 108. There is some more room to the upside here, but let's see how the market reacts first to that 107 to 108 region and whether we do get that breakdown. So I bring up this news piece because basically you're just seeing the same thing happen at the flip side. Banks saying that, well, US dollar is going to keep going up and the euro is going to fall. Maybe we see the opposite happen because they said the exact same thing at the lows. The US dollar was collapsing and BRICS is coming after us all, and that's the end of the US dollar. And then what happens? Goes on one of the biggest runs it's ever seen, week after week, straight weeks up. Just remember that. That was the bearish news. We had the bullish news for the US dollar here, and then it just basically tanks from that point. So the S&P 500 also looking healthy. Small rejection here at 50%, but it's still holding up here and basically holding the support level and looking like it wants to consolidate a little more to get back above. That's good news for BTC as well. The VIX is still in its bull market zone here, continuing to test the upper limits of the range and then start to grind its way lower. So this is the volatility index for the S&P 500. Now, I've got this to show you here, just throwing over the S&P 500 overlay, and you can see the how it corresponds to the lows in the market, where you get these big spikes in the VIX because there's high volatility, people are freaking out, the market dumps, and then you go on a lowering volatility run, lower lows, lower highs. Of course, there are some peaks because you get little drops in the S&P 500 as well. And you can see in the orange, the S&P is going up. So the same thing happens in reverse there. You got the big spikes at the lows for the S&P and then the volatility index, and then you get a nice big move to the upside, and it just continues on and on and on in terms of the VIX. So we've just started this run again. We had the bear market of 2022. You can see how the volatility index was nice and high. Now it started to grind its way lower and lower and lower. We're going to see some spikes when the market does go on its dips. And then I dare say as the S&P 500 continues up, you're going to see this thing continue to grind lower and lower and lower. So that's a good sign for the bulls, at least on the macro sense, that the markets are continuing to move in the direction that we've been anticipating since the lows of 2022, which of course is a good sign for, you guessed it, Bitcoin and cryptos, because this is going to take a little more time to continue to consolidate here. So we've gone through those there. We've got the market climbing the wall of worry, which is essentially this pattern. Recession fears at the lows, banking non-crisis at the lows, US debt ceiling crisis at the lows. Government, do you even remember what happened 2 weeks ago? It was all fear about the government shutdown. I haven't even heard of that lately. And the next fears that came up, of course, were unfortunately the wars that started last weekend through the Middle East. And also sticky inflation's come back with such a marginal increase. There is always something to worry about if you want to stay up to date with those things so that you don't get scared out of the market with all of the fear porn that pops up on YouTube telling you why the markets have to collapse at some point. My link for Twitter X is in the video description down below, and this is the pinned tweet on my account so that we can follow along with how the markets actually work and see it in real time with the bearish news coming out, which keeps putting in higher lows for the stock markets across this macro period. This is analyzing the markets and then being able to play on them and use it to our advantage so we can make money from them. Eventually they collapse, but at the moment the signs are all up in a macro sense. The profits are also up for our traders at TIA Premium. I got that segue in. Now, just a quick chill on here. This is for our TIA Premium membership, link in the top of the video description. Otherwise, sign up for our free crypto and economic report. You don't find any value, you can always unsubscribe. I think it's one of the best investments you'll make because it's absolutely free. You can read it every 2 weeks, full of great detail. Link is right there. And if you want to know more about our members hitting their fantastic profits here, 90%, 50%, 30%, and even the new guys hitting profits, then of course, go ahead and have a look at TIA Premium. So shout out to all you guys who are posting your beautiful, brilliant big trades here, especially if you're new in the space, like these guys here as well. So well done, hitting your profits, nice 500%, 30%, 180%. Let's move on. BTC, the pump, it happened right in the zone here, 28,381. So you know I've been talking about 28,400 for a very long time now, since we bottomed in September to give us that 50% range. That's the line right through the middle there. Now we are looking at the market testing this zone to a T. It would have been lovely if we got a close just above the previous high here, which was at 28,613. But you know what? The markets don't give you everything to that is that specific or that perfect. So we got to wait another couple of days. Right now, it's the first hour of trading in the new trading day, and the market is just pushing lower to see if it can test some of those previous tops. I dare say it wants to test this level here at around 27.9 to 28,000, somewhere in that zone. And then for the bulls, at least, they're hoping this market starts to climb back above and get another close above $28,400, just like what happened yesterday, closing at $28,500. So this is a good sign for the bulls, at least in the short term. Remember, also, markets don't like abnormal moves, and yesterday was definitely an abnormal move, just like what happened back in August. You know, there's some sort of ETF news that pumped the market there. Market sold off at that point. And at these lows, this is when I had some of the biggest haters. Now, the comment section is always a good way to understand what's going on out there in the market and what people are feeling, because that's essentially when people write comments, when they hate something, when they love something, or if you are a regular subscriber, you just like to throw us a comment down there like a thumbs up to help out the algorithm. But for the others that sort of just click onto the videos because they see a thumbnail or a title, they just read titles and jumps right in, they get a little triggered at those points. And that was to a T on that day, which was the low that they were calling for, well, 20K, sub 20K. It's a really, really great indicator to be able to get a gauge on what the retail investor is thinking, because from that exact point, that basically double bottom on 25,000, which was a double top, the market has climbed higher and then just pumped at this point. We're still not completely in the clear, but I mean, all of us here can see that that is a daily uptrend. And from that point, they were all 100% incorrect about the market collapsing from that point, because the market did the exact opposite, gave everyone the max pain, and put in a higher low and a higher low. It's not as easy to see in the earlier stages. Basically, we're looking at this as around that first stage of the entire bull run, because, well, like we can see from the comment section, there's still a roughly even number of bears and bulls telling us the market should do one thing or another. But what the market players are doing, the people who are actually putting their money down, well, in this case, for the last, I'd say, month and a week, they've actually been winning to the upside. The bulls have been winning to the upside, putting in higher lows and higher lows. Let's see if we can get some consolidation above that 28,400. And that's, of course, going to continue to build the campaign back towards 32,000. And maybe we see a fresh breakout of 32,000 later in this quarter 4 of 2023, while the masses were hoping for a breakdown of 20,000 and potentially the recession that's looming and coming to break down past the cycle low. I've gone on record saying I don't think these lows are going to get broken. 15.5K, 20K, based on the analysis, based on the technicals, based on the fundamentals, based on the market sentiment, there is a lot of evidence saying that these lows are not going to get broken in this cycle. Okay, so keep that in mind as well, and do your own research, put it all together so that you have a solid plan that you feel that you can trust no matter what happens in the market day to day. Speaking of day to day, Grayscale GBTC breaks out. So this is the Grayscale's Bitcoin Trust, and it's a share that they hold, and obviously investors buy and sell these shares of Grayscale. We're at 2180, but it's broken out to the upside with higher highs and higher lows. Whereas you can see there's a slight difference here with Bitcoin's pattern. That's because there is a discount on this. So if you are buying it at a discount, you've got to hold it long enough to and hope that the discount gap reduces and it gets back to a 1-to-1 with Bitcoin. Now, don't be fooled by the share price. This is not going to go up to $28,000 Bitcoin, but it's still discounted in terms of the percentage that the share uses of Bitcoin. So last time I saw it was roughly somewhere around that sort of 16% discount. But in a bull market, this discount usually evaporates and then you're paying a premium. So beware of that as well. If you are trying to get into that at the premiums, this can fluctuate and then become a massive discount like it was back at the lows, somewhere at a negative 45% discount on the true value of BTC. As for ETH, it has also continued to break down on the daily here. Yesterday it went on a bigger tear than when I was filming that last video, and it took off down to the support level that it's put in for the last several years. Since the cycle low here of ETH BTC in 2016 on the border of 2017 and the cycle low of 2019. Remember, this is ETH BTC chart. It's had the bottoms touch it across 2020 and just into 2021 as well. And now we've just come back to that pink line as well. So in terms of the next support levels, you can see we're looking at 4% up to 5.2. The market is sitting now at a low of 5.4%. So there's still a bit of room to the downside to move. In the other chart that I've got here, we're looking at loading up on the risk again. So loading up on those cryptos, the risk cycle starts again, I think somewhere around that zone, 4% to 5.2%. And in terms of time, as we've covered in previous macro videos, which is another good reason to subscribe, like the content, all that sort of jazz, the time frame is probably somewhere around February, March of 2024, where this market bottoms similar to previous cycles. This went on a 115-day downtrend, 115-week downtrend, and that 115 weeks this time lines up with mid-Feb, possibly if it extends into March. But I'll be looking somewhere around that Q1 of 2024 as a possibility of a low forming for ETH, which may also be that low for the altcoins as well. The important thing here is to understand which altcoins are going to be stronger at this time. The majority altcoins continue to break down and show great weakness against Bitcoin and probably won't get those massive pumps in the bull market. Now, I love seeing comments about this, people saying, I'm so bearish on alts. Well, the charts are bearish on alts. You're just emotionally attached to your alts. So if that's the case, I wish you all the best. But getting emotionally attached to any investment is a surefire way to get absolutely wrecked in the market. I don't wish any hate upon you. I don't wish you losing any money, but please stop getting so emotional with your altcoins. They're all garbage. They're all going to get destroyed. Think about who owns these things. There's probably some other emotional player in the game, and the CEOs and the founders have probably skipped town on most of these things. There's no way you're going to see 20,000 cryptos go back up in the next cycle to break previous highs, that is. You can see the weakness forming through many of these alts which are hitting new fresh lows. Matic, new fresh low here. Let's click it on Mana. Mana, new fresh low as well. Near, new fresh lows. Link, it's been talked about a lot lately. Another recent fresh low of several weeks because it did go on that run, but it's on the downtrend again. Render was going up yesterday. It's on a good trend here, but it did close pretty low after that big move. Sand also absolutely destroyed the gaming metaverse space. What else can we look at? We can look at Sol because everyone loves Sol. This actually was looking like it was heading up a little bit, but it's still in quite a weak position. You want to see this thing start to break some previous highs before it is signaled as a strong crypto here. It's still within a pretty big trading range. So be very, very aware of that as well leading into the next cycle. And to cap it off with some of these top 10, top 20 projects, XRP breaking to new fresh lows after that old win against the SEC. Now, even the BTC pair is getting quite close to the price of where the market pumped after the win against the SEC. Pay very close attention to which altcoins you are DCAing into, because it's possible that 30, 40, 50% of that money has already evaporated and you would have been safer just buying Bitcoin and holding it for this game. Yes, in the bull market cycle, that's when the things are going to pump more than Bitcoin. But if those cryptos are down 50% in order to get back to at least break even, it's got to do many multiples of return just to get back to break even before it even starts to make you any profit. Personally, I like to wait on something like ETH, gives me a sign for a low, gives me a time frame of a low, and then I like to wait on some breakouts and entering above those levels. All we want to do is make the profits from the market, get in at the best possible time, the fastest times, and then get out on the breakdowns like we showed in 2021, getting out of Solana as it started to break down from key levels. Guys, like and subscribe. There's a video popping up on your left-hand side from yesterday where you can see more of those key levels that we were looking at. That's a huge wrap of Bitcoin, the price targets to look out for, what we're looking for in the macro cycles as well, how things are looking overall. We'll be back again with another cycle video. If the market goes a little quiet, I'll do something a little bit more macro for you. So stay tuned. You know the deal. I'll see you at the next video. Until then, peace out.